Hi everyone. Today, let's talk cruise lines. Should you buy cruise line stocks? Royal Caribbean, Carnival, or Norwegian cruise lines? Are they going to survive the pandemic? Let's find out. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying your own cruise ship, like the Queen Anne, go ahead and like and subscribe. It has a beautiful back deck area. It has a large dining space. The living area is warm and modern. It's currently on sale for $19 million. It also has a formal dining space. It has a large master bedroom and room for 12 guests. And of course, a modern stone bathroom. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. So, is it time to buy cruise stocks? Let's take a look. So first is reopening. Las Vegas casinos have a plan to reopen some of their hotels. Restaurants are starting to reopen. Retailers are opening their doors. And the society as a whole is opening with a new normal, including face masks and limited capacities. Next, it says Carnival has listed August 1st as the day it plans to reopen its operations, and Royal Caribbean has hinted at a similar timeline. So the issue here is not really the cruise lines being prepared to open. The issue is, of course, will anybody show up? People need to be comfortable to go on these ships and congregate with hundreds of other people and enjoy themselves. I mean, a cruise line is supposed to be a vacation, right? So people are coming here to have a good time, but they're not going to have a good time if they're constantly fearful of everyone around them. Also, the age demographic that goes onto cruise ships is generally older, which puts them at a higher risk. Again, reducing the amount of confidence of the people who normally seek cruises as a method of vacation. And then, of course, for all those people that do go on there, there's the risk of some kind of outbreak happening. And then what? You're essentially stuck on this ship indefinitely like the other people prior to this cough situation. I think it's definitely going to be a tough sell to get people to go back on these cruise ships in the near future. I think it's going to take probably a few years before they see normal capacities that they were seeing before. It then goes on to talk about some of the health precautions they're going to take. They're going to do consistent temperature checks. They're also going to have medical professionals where they need them. They're also going to do stepped up cleaning measures and revamp the buffet style that they are going to use on the ships. And they will probably constrain the capacities, at least to start with. There's potential for them to do rapid testing. But I guess the question is, if there is a positive test, what are you going to do? Are you going to quarantine that person in their room? It's probably likely that all of the people around that person already have it. And that's the risk of a ship. I mean, it's an enclosed space. It's the thing they tell us is the most dangerous space to have this cough situation going on. And then it goes on to say the things that I mentioned before. Will they have to lock down the whole ship? And will everybody be stuck on the ship if there is a positive case? It then goes on to say that all three cruise lines need to make a clear plan for getting exposed customers off the ship and safely into a quarantine situation. And of course, that's something that the CDC will want to know about before they can make any judgments on the cruise industry as a whole. It goes on to say that it's certainly possible for the cruise lines to have a plan for this. And most of the customers in the early days are going to be coming from the local area, so they can simply drive home and go self-quarantine there. But for out-of-state customers, it's going to be much more difficult. Can you quarantine them in a hotel? Can you charter them a plane home? There's certainly a lot more questions when they need to travel somewhere else. And of course, none of these solutions are cheap. So perhaps in the early days, they need to limit customers to the local area because they need to have a way home without interacting with other people, which would mean no air travel or any kind of public transportation. So essentially, they need to drive to the cruise ship, and that will give them the ability to drive home if there's any kind of situation. Of course, then when you're quarantined at home, that presents a whole nother set of problems. So is taking a cruise worth all of this hassle right now? I think that remains to be seen, and that's why cruise line stocks have been hit probably the hardest of any industry at this point. Next, it says all three companies have taken steps to increase their liquidity. Basically, this means they've taken on quite a bit of debt, And this is in order to cover the revenue that is not coming in and allow them to stay solvent. Just to expand on the idea of burning through cash during non-operating periods, it says here that Royal Caribbean is currently spending $250 million per month while their operations are suspended. A little quick math says that they are spending $750 million every quarter. And of course, they have no revenues, so all of that money is either cash on hand or it's from bonds. And then it goes on to say if they do run out of cash, they will have to offer more bonds, or they could issue new stock or convertible debt, which is a bond that turns into a stock. It also says here that the cash burn does not stop as soon as cruises begin again. Of course, they won't be profitable for quite some time, so they will be likely burning cash for the foreseeable future until pre-cough demand resumes. Moving back to the other article, although that debt is needed to stay solvent in the short term, that debt will weigh on these companies' profitability for the foreseeable future. It says the next thing they need is CDC approval to cruise, and then, of course, customer demand. We've already talked about demand. Without the public feeling comfortable going on these cruises, the demand is going to be limited. It then says what we talked about earlier, that the first people to come back are going to be people that are local to the ports and people that cruise regularly. Finally, it says there is some long-term upside with these cruise stocks as long as you're willing to assume the risk. And the risk in this case is that these cruise stocks go bankrupt. So in terms of my thoughts on buying cruise stocks right now, I think this is a really solid risk-reward play. A lot of these stocks are down extremely heavily, somewhere around 70%. And if you are willing to risk some money with the potential of losing all of it in the case that these cruise lines go bankrupt, then there is a potential that these stocks could go back up to their previous highs, which would be a significant gain. So there certainly is real risk here, but the potential for gain is also there. In terms of which cruise stock is currently the strongest, Royal Caribbean is the least risky. And that's because they really have the most liquidity on hand without having nearly as much debt as their competitors. It says here all three of these stocks have dropped 70%, like I mentioned before, compared to the 13% of the S&P 500, which it's actually less than that now. And it says Royal Caribbean is the second largest cruise company behind Carnival, but they are better capitalized. They have a lower debt to income ratio. It was about 1-to-1, whereas Carnival has a 2-to-1 debt to income ratio, which in a case like this makes a very significant difference. With a much lower debt to income ratio, if they were to have an issue, they could potentially get more debt at a cheaper price, whereas the position that Carnival is in, it will be much more difficult for them to get more cash on hand if necessary. And lastly, it says here that the current price target is $48 per share, and at the time that this article was written, the stock was at $35 per share. As a concurrence, Morningstar agrees that Royal Caribbean is undervalued. Morningstar assesses the fair value to be $68 per share, and it says here the last closing price was $43 per share. It has actually gone up from that, and the last close was around $52 per share. And that's down from 52-week highs of $135 per share. So to summarize, all cruise stocks do face significant headwinds. However, there is potential for returns. And if I had to choose one out of the group, Royal Caribbean is the best capitalized. But of course, this is not financial advice. Consult your financial advisor before making any decisions, and this is all for entertainment value. Let me know in the comments what you think about the cruise stocks. Definitely like and subscribe if you found any of this information valuable. And with that, let's get to today's jelly. Today's jelly is Jetman. So Jetman is a stunt guy who uses this backpack wing configuration as well as 4-jet engines to fly around. I've only ever seen videos of this in Dubai, and here's another one of those. As you can see, he is an adrenaline junkie, and it looks like a pretty sweet ride as long as you know how to control it. Comment down below what you think of Jetman. Go ahead and like and subscribe so you don't miss any of my future videos, and have a great day.